Hello, it is the 5th of April 2011, and welcome to today's Silver Log. Hope everyone is doing magnificent. And silver once again making another 31-year high as the breakout patterns are playing out like they should. Now, this daily chart is a logarithmic one because I feel it can show a lot of differences as the trend line that I was showing, well, on this one, it has not been broken. It's the exact same sort of trend that connects these lows with these lows with these lows and so on. The candle formation itself, the psychology remains the same. Whereas you had this rally that made new highs, consolidation through time, and then the confirmation breakout the breakout candle. This is confirmation more than anything. And what I like about this is we can see on this current candle, the the last one or today's, that it came right back down to the previous resistance. That's the liftoff support more than anything, because I call it like a liftoff support because you break the key resistance level right in here. You have your one push higher, and then you have the original retracement back down, and thus being successful support. So as I was saying yesterday, most likely not a test of the 5, which did not happen, and between the 1, maybe the 2-day, it looked like between the 2 and 3-day average is where it probably would have found its support. It came back down, of course, to that 38 level. Now, since it's had its decent sized gain from here towards here, this is a gain of roughly a little over $1. But these days, $1 doesn't mean as much because on $40 an ounce, $1 is 2.5%. Where when it was $20 an ounce, it was 5%. So $1 doesn't mean quite as much. That's had a little bit of consolidation here. It's still a little overextended, but if it continues to correct through time, then that will take away its overextended features. I can only imagine that the Bollinger Bands were extended, and you've thus had just a little bit of short-term correction upwards around this 39.30 area. It's very close to that 39.33. What I would like to see, or what would be ideal, is a move back down to this previous resistance here, roughly around 38 and 3/4. Maybe coincide within this 1-day average, and then come back and test this little area where it can get above it, and then work towards the 41 level that was mentioned within yesterday's video. We see the Fibonacci levels, they're starting to expand. Definitely lots of upside room potential left before it has to give back its gains. To finish this off, we will take a look at the volatility that I've been showing for the last little while, more so on the blog more than anything. And the volatility comes from in here. This is how much the silver moves on an hourly basis from the top to the bottom of the hour. It's a simple calculation. You take the highest level that it was at within the hour, you subtract it to the lowest level it was at, and you find out how much it gained from the lowest point. That's a percentage move, and really all this is the sum of both the 30 and 120 period moving averages, and then I multiply that level by 1,000. Either way, it's the sum of the two giving the formation, which is showing the lower volatility. The markets have been going higher on the low volatility. It had some really decent movements here, but when you compare it, every so often it has these moves. It's still showing low volatility. And I guess really until it gets above this little area in here, the everything's staying low volatile. That to me says that sellers aren't all that eager to come into play, and at the same time frame, there's no large amounts of institutions that are bringing the market up. Once again, overall low volatility should mean higher price movements. Thank you for watching.